What's going on, everyone? Welcome back for another episode here with me, Jeff Sebastian. I am here with Let It Grow Investing. And yeah, we're back for, I think we are on episode 280 or 298, 299. We're creeping right up to 300. But yeah, it's going to be an episode of who is going to blink first. That is going to be the big question. Is it going to be a U.S. problem? Is it going to be a China problem? Who's going to crumble? Who's going to crater? And that is going to be where this market is going to go. And man, it's a nail biter, I think, any which way we look at it. And I think it's going to have a ripple effect in places that aren't U.S. and China for sure. And that's going to be a lot of what investors are going to want to know this week. We do have quite a bit of earnings news going on. So yeah, we're going from a lot of tariff talk, and now we're looking at more, what are these companies actually going to be showing us? This is just a NASDAQ earnings for this week. It's actually NASDAQ.com, market activity /earnings. If you're looking to follow along, you can check out who's going to be reporting. And Tuesday is going to be Tesla, SAP, Novartis, Verizon, RTX, which I don't know if they go by Raytheon still or not. Intuitive Surgical, Danaher, which I had to do a college report on the competitive advantages of what Danaher had in their space, right? They're a local company kind of to me. $136 billion market cap. Tesla's sitting up here at 776. And yeah, what else we got this week? We've got Philip Morris, IBM, AT&T, Thermo Fisher, ServiceNow, Boston Scientific, NextEra Energy. We've got some in there as well. Texas Instruments, Boeing, CME, the list goes on. So yeah, we're really transitioning from a lot of tariff talk, and we're still in that mess, don't get me wrong. But now we're looking at what are these companies actually able to do with all this other noise, right? So we're going to get a little bit of clarity as to what these companies think, where they think we're going to go, what is really affecting their bottom line, and we're going to actually have some grounds to make some better decisions going forward, right? So yeah, we got Alphabet, T-Mobile, Pepsi, Union Pacific, Gilead, Sanofi, Comcast, and then who's on Friday? Anyone? AbbVie, Aon, that's an insurance company. We've got, I don't even know, HCA. Colgate, Palmolive, Schlumberger. We got Charter, Philips, Centene, so some more healthcares, some more chemical companies. We got a lot of different things going on, guys. So there is going to be a lot of news. I think we're in for a rocky week, especially with some of these major companies reporting. I think there's going to be, again, ripple effects. If Google says, hey, we can buy more AI, we can build more here, we can spend more there. If we're doing big on CapEx, I think that's going to have more ripple effect as to how strong they feel right now, what that means to other companies, what it means to the economy, and really what kind of numbers they're seeing. Are we still advertising? Are people still shopping online as much as what we were? Has it slowed down? And I think that is going to be the trend right now. So we are seeing more and more layoffs. Really with China, man, that is going to be top of mind for everyone. They cannot sell the product that they are making, right? The U.S. or the worldwide economy, the U.S. counts for 40% of that consumption that is made throughout the world, which is a massive number. And if we're not buying from them, they are, in a world of hurt. They're making all the product. All these people rely on these jobs. And, they want to get fed too. So if we can't buy product from them, and they can't, hey, there's no one in Africa that's able to purchase like the U.S. can. It's just not going to happen, not overnight. So even if they were selling it at a discount to these other nations, they're still at such a loss. It's just insane the amount of ripple effect that one call has throughout the economic world. So we are firmly implanted in a economic war between U.S. and China, not military, but right now it's an economic battle. And I think it is going to be a case of who blinks first. So that is going to be the title of the episode. I probably should write it down before I forget it. But that is what I'm looking at, guys. It is a real battle out there as to who gets that first jump. Are we going to be able to withstand, the pain that we're kind of inflicting on ourselves? Or, is China going to really try to play hardball? It's going to be a tough call to see what happens here and who is going to end up in that number one spot. So do I think that we can produce all the things that we need to produce here in the U.S. in the next 2-3 years or without China? No, I don't. I think we're obviously going to have to lean on other trading partners. I think there's got to be a middle ground between the two of us. And I think there's got to be a meeting at, someone's got to come to the table and say, this is what we need. If you want to sell all your goods here, you're going to have to pay us, X amount when goods are imported. Otherwise, we just won't do business with you. And, it's going to be something like that. So who is going to benefit from this? Who's not right now? And I did want to pull this up. I am looking at bad news from Walgreens, but we are going to go right to NVIDIA and AMD. I'm reading reports that the Walgreens dividend after 92 years is officially cut. I am trying to see what's going on with all the buyout. I have not been following along that closely. I'm going to share NVIDIA. We have this pulled up. We've got NVIDIA at 101, man. And it wasn't long ago we were looking at 150. 150 on January 7th. So a big sell down here for NVIDIA. The shares look cheap. The growth looks cheap, but there is a problem, right? And that problem is going to be that, the U.S. is, basically going after a lot of the chip makers, and we are putting new export controls on chips that are going to China. So AMD is looking at up to about $800 million in inventory, purchase commitments, and related reserves of a charge. And NVIDIA is looking around $5.5 billion. So I'm not too sure the ins and outs. I don't know if that's what we're going to have to pay in order to be able to do business over there, or what the exact play here is, but I know that they are really going to be fighting to be able to sell their chips in China, right? That is a huge driver of growth for both AMD and NVIDIA. So going forward, it makes it a little bit harder to go ahead and purchase them because we have a lot more uncertainty around what these stocks are going to be capable of returning going forward. So we don't necessarily just want to blindly buy in at NVIDIA because it's a third cheaper than where it was at peak. But we do want to really make those calculated decisions. Is this going to be a short-term thing? Is this going to be a long-term thing? Are these fees going to be ongoing? What is the play here? And really, where do we go? So you can see here, currently it says there's about 67% of upside, the high being 220, the low as 120, and we're sitting, roughly, 20 points below the low. So it looks like on paper, this is an easy purchase right now for a lot of gains. I'm not arguing with you. I tend to agree with that, but there are so many unknowns right now. And I probably am in the camp of it's oversold too much, and something's going to happen to where they're going to be able to sell. There's going to be some fees. We're going to know what kind of playbook we're going to be facing. And then NVIDIA and AMD and the others can, roll into that market, stay strong, and really kind of be resilient going forward. So it's tough. It's very, very tough. Earlier this week on the 17th, we've got a 150 buy from Argus. 17th from Wolf is 150. Rosenblatt says buy. It's a $200 price target. Stifel Nicholas says it's a 180. So those are all this week. But yeah, you do have a hold from 416 from Maybank, which I'm not even too sure who that is. And they have a 1-star rating here. So you might want to do a little bit more research on that one. So again, a lot of uncertainty, a lot of fear out there. Could be a good time to buy it, but you got to understand the risks of what's going on with the company, where we could be if nothing does happen with China, if they don't come to the table, if those charges don't get passed, if China just says, hey, we don't want to buy your chips, keep them over there, we're going to build our own. That's another possibility. So where do we want to be? We've got a lot of different things going on this week. I did want to look at UNH. UNH got absolutely pummeled after a less than stellar, but not all that bad earnings report. I did not read the actual guidance though, but just looking at the overall numbers, they missed marginally. We got EPS of $7.20, missing expectations of $7.29, so 9 cents on EPS. And revenue of $109.6 billion, missing expectations of $111.6 billion. About $2 billion missed on revenue and 9 cents on EPS. Is it great? No. Obviously we were looking for more, but is it 20% off? That's the big question. Is it really a case where this stock should have sold off 22% on this news? Without knowing all the details, it makes it a little bit tough. top of mind, no. I think it's a little bit overdone. This says United Health is struggling. How Trump's Medicare Advantage plan will help. So that could be a decent piece of news. Granted, that's just a headline. I didn't read the whole thing. United Health sees a surprise and jump in seniors getting treatment, and stock suffers biggest drop in decades. So, what more seniors are going to get treatment, costing them more money apparently. So that could be a problem. So they're not making as much because they got to pay out more. Yeah. So there's a lot of different things to unravel there. I personally think that I would probably be on the side of this is something that I would want to buy on this weakness. And then on the other side, you've got Eli Lilly, right? 3%. So huge moves in United Health and Eli Lilly, both of which I was looking to purchase. I had said Eli Lilly was a little bit more risky because they're a little bit more growth driven, right? They're more like a tech, or like a biotech company that's really trying to innovate all these new drugs. So I had, a little bit more tolerance for risk. I would probably be buying more Eli Lilly than say an AbbVie or a Johnson and Johnson, simply for what it is. Personally, I probably would have been buying both if I had more cash at the moment. People still need to pay me their money from, January. It will happen, but right now I'm just waiting on some funds to come in to have some excess cash to throw at the market. But Eli Lilly, I wrote a couple notes here. I'm probably going to botch the name. Orforglipron is a new GLP-1 that met a pivotal goals or in this new study in diabetic patients to lower blood sugar and reduce weight. And that could potentially be a big blockbuster going forward for them. So we've got, as Ozempic competition grows, definitely. So I'm trying to read a little bit more here. So we got Trump pushes for domestic manufacturing. They vow to make weight loss pill in the U.S. as Trump pushes for domestic manufacturing. I mean, that makes a lot of sense to me. We've seen what happens when other countries control our drug supply. We had a lot of those problems during COVID. We had a lot of the chip problems during COVID. Remember, we couldn't get anything. So the more that we make here, the more that we have control over here. I think that is, definitely a thing of, U.S. health and safety. I definitely think that is a major concern, right? So those things getting made in-house is huge. But Orforglipron, the new GLP-1, meeting those goals that they were really looking to pass is one step closer to FDA approval. I don't know how it interacts with diabetic patients. I have no basis on that. All I know is I'm very cautious about what you ingest and what medications you take, especially if you are grossly overweight. I'm talking 200 pounds overweight. You have to do something to get jump started into losing weight. I completely understand that. If you are looking to lose 10 pounds before beach season, I don't understand why people are leaning on these to do that. I don't know that we know enough about it. And I worry about a lot of the side effects from taking these things. So I would definitely push people to read a little bit more into it before going on drugs like this. There's a lot of things that worry me about it, right? You've got osteoporosis from not eating or not, having appetite suppression and muscle deterioration because you're not feeding your body what you need to be feeding. You're basically starving yourself with a drug. It's definitely concerning for me. I'm probably more of a health nut than a lot of people. So there's definitely a lot of concerns for me. I mean, exercise, diet, and all the health things that you can do would certainly be my favor right there. But I mean, everything is subject to your own interpretation and approval. So I guess do what you're gonna do. But I guess I'll just throw that in there for myself. So yeah, we got that. UNH, I still think it's down too much. I definitely would do a little bit more research. Walgreens, I know that E-Trade still had the dividend on there as like 6%, but I know that this is a painful one, guys. This is they're paying out $300 million in this opioid case settlement. We got that problem. We got the turnaround still in its early stages. Yeah, I'd say so. We got tariffs won't stop the Walgreens buyout. So we're getting bought out. We've got some sales in pharmacy are increasing, but man, there's a lot of different problems. I wouldn't buy this thing. Man, I said it before when people were chasing and another YouTuber, which I don't claim to be a YouTuber. He said he had $1 million of Walgreens at 4%. And banking 40 grand a year in dividends off of a Walgreens. Man, that is absolutely painful. One, you have all this loss in the actual asset that you're purchasing when this thing was at what, like $30, and now it's at 11. So you've already lost 2/3. Sorry, I was looking at the EPS being 6 something, but the dividend is sitting at 9.2%. That's not going to be sustainable. They're not making any money with negative EPS of $6.69. So yeah, the dividend's going to get cut. They're paying out this $300 million in opioid settlement fees. We got a buyout. We've got a turnaround. It is not a spot that I want to, put my cash into right now, even at this turnaround stage. It's too early. Show me something. And more than just this, we've got better than expected pharmacy sales. I don't see it. So there's a lot of fears there. Where would I start looking? Who can weather the storm? I think there's going to be a couple companies, right? Well, Google, I'm still a Google buyer, right? I still like Google. I'm still not fearful so much of AI when it comes to eating into Google search. I've talked about that before. I think we're going to Google and AI for different things. You go into AI, write me a paper, create me a logo, draw me a picture, whatever. Where Google, I think hey, I need to get, Tony's Pizza on whatever Main Street. I need that number. I want to call them, right? So I still think you're going to have the business advertising on Google. You're not going to ChatGPT to write you to order you a pizza, at least not yet. So there's no monetization on ChatGPT. I still think that's there for Google. So I still think the advertising dollars are going to be there. YouTube is still strong. I think they're a distant third in web services to Amazon and Microsoft, but I do believe that could be a further driver of growth going forward. So I'm still bullish on Google. I think that, the growth of Google isn't going to be impacted as much by tariffs as, say, an Apple or, NVIDIA or AMD for sure. But I still think that Google has a lot of different things going for them when it comes to search, when it comes to advertising, YouTube. I mean, I just ordered a new Pixel phone, but that's neither here nor there. And I'm not even sure where they're made. So I would have to take a look at that. But that's a much smaller portion of their business compared to what Apple does, right? So if Apple gets hit with these tariffs, they can't make them there and they have to make them here. That iPhone, as everyone's talked about, that iPhone is going to go from 1,000 to 5,000 or whatever it's going to be. So there is a lot more fear for me around Apple and the iPhone sales. I've got also another piece of news here that CEO Tim Cook was looking to bring AR glasses, augmented reality, to market before Meta. So that is top priority for him right now, is bringing AR glasses that can be worn all day to market before Meta does it. So they are in a battle for that. I think they are trying to kind of get another iPhone, iPod type product that is just going to take over the market. And I really think that they believe the AR glasses could be that. So Google is one of them. The other stock that I really believe I should be buying hand over fist right now is going to be Amazon. There's a lot of different reasons why I believe Amazon could be purchased now. I mean, the PE, the valuation, a lot of that. But we're at 173. We got the high from February at 242. So we've come down, 70 points, call it. So definitely, I'm not necessarily comparing it to the high. I'm not really saying it's going to get back to 242, but I'm saying it's way pulled back. The NASDAQ has returned around 100% over the past 5 years. Amazon's only returned about 4%. And we've just given a lot of that back, right? So I think that Amazon was that high flyer when it was in the $2,000 price range, and we had all the stock splits, and now it's kind of quiet. But I think that it's kind of a coiled spring as well. So we've got a lot of different things here. I'm going to pull up the Refinitiv report. This is probably, I think, one of the stocks that I would be most prone to buying right now. I want to move my little pop-up here. Let's move that over. 5-year return of 45%. Yes, that's what it was. I don't think that's where it's at right now. I think we've given a lot of that back. So we've got, let's take a look down here at upside, around 46% of upside. Yes, some of that's probably old. I'm not so concerned about that. Let's get down to the actual numbers, right? We got solid growth going forward, 9%. By the end of 25, 9% doesn't sound like that much, but when you're a $1 trillion company, it's a lot of growth, right? 50% by the end of 2026. So still steadily growing. We are going to be getting this thing at a discount. I just want to quote how much of a discount, right? So we got 57% discount on trailing PE, which is a rear view mirror. I understand that. We're not looking at that's not looking at what it's doing now and forward. Yes, it might be, it's not foolproof. Things could change, but based on the forward earnings, right, that we're looking to actually get going forward by the end of the year, we're looking at a 56% discount to where we historically trade. Historically see Amazon at around a 63 times multiple. Right now it's trading at 27. So you could take that, look at some other consumer packaged goods companies, and probably get fairly close. I don't know where Pepsi's trading right now, but it historically trades in that mid 20s type range. And you're getting Amazon for the same type of price, right? So yes, it's a premium to the S&P 500, but the growth is there. The trailing PE is, just well down from where it normally is. If we look at this number, we've got price to sales. Yeah, it's a little bit of a discount. This PEG ratio is one of my favorites to look at for something like this. All right, we are at a 1.6. Our 5-year average is a 2.0. So that means the forward PE divided by the 5-year forecasted growth rate. So it's not just a this year thing. It is a next 5 years that right now it is at a historic discount compared to its 5-year average. And again, forward PE is cheap as well. Why? Why am I looking at Amazon? Well, a lot of different reasons. But I think that Amazon is going to navigate this tariff talk better than most, right? I think Walmart can do it. I think Amazon can do it. I think we're going to have a lot of different people leaning on Amazon to sell on there, where I don't think that a Walgreens is going to be able to navigate it. I don't think that some of these other companies are going to be able to navigate it as well. You got AWS, you got all the things that they are growing into, whether it's grocery or pharmaceutical. I think they're going to nail that. But I also think that they and Costco and Walmart have the buying power in order to make this thing happen. So I think that being down at 173, I think is a gift to us as investors. I think if you had it or bought it at 240, you're probably looking at like, man, this is awful. But I think long term, this is a great time to be picking up Amazon, at least for me. So I'm looking at that. I'm certainly looking at Google. I definitely still like Meta as well. Meta and Google are going to be the two advertising giants that come out of this, I think, in a better position, right? Meta is going to be one that people are still going to lean on, whether it's for social, whether it's for advertising or selling. I still think it is going to be a number one spot for a lot of those things. For local small businesses, I still think Meta is going to be right at the top. So the dividend's nothing to write home about. I'm not looking at it for that. I'm looking at this. Let's take a look at Refinitiv again. So Refinitiv, let's take a look at that. RT, let's pull this up, right? We're looking at a buy. They've definitely had a better 5-year return than Amazon. Oh, let's just get down to the numbers. I don't need a bunch of talk. 43% of upside. We've got 13% of growth for 25 and 28% of growth by the end of 26. So better than Amazon there. We're going to be looking at, the dividend's nothing again, 0.4%, 8.4% of the dividend payout ratio. 12% discount on forward PE. So not as much of a discount as where we would be on Amazon going forward, right? So we've got, and it's actually trading lower than the S&P 500 where Amazon was not. We've got expensive on price to sales. We're at a 6.9. 5-year average is a 6.4. Expensive on forward PEG ratio as well as a 1.8. 5-year average is a 1.6. So you're getting a little bit of discount on forward PE. But long term, the growth here might not be as strong. The growth or the earnings might not be as strong going forward for Meta compared to where Amazon might be able to return. So I still looking at the two of them. I prefer Amazon right now. I think that Costco has a strong foothold right here that makes a lot of sense for me as well. I'm going to take a look at Costco. Let's pull this one up. Obviously, Costco, Amazon, and Meta are completely different companies. There is some overlap between them, but Amazon's going to do a lot of different things that Meta's not doing. And, obviously Costco has a different lane than what Amazon does, but I definitely think that Costco can weather this storm in diversified retail. We're definitely a strong company here, but it's expensive, right? We're looking at a trailing 12 months of 56.4 And if I'm looking at Refinitiv, it gives us a neutral. They did just bump this dividend from $1.16 to $1.30. So this is a new dividend right here. We got Refinitiv. Let's share this tab. We are at a buy, 5-year return, 213. So better than Amazon, better than Meta for Costco, right? And a lot of people don't think of it as this stellar growth stock, but man, it flies under the radar on a lot of those numbers and able to churn out some serious cash. 7% of upside. So that's not as enticing. We've got 7.8% of annual revenue growth. The other two were better. It's 15 by the end of 2026. So still, Amazon and Meta look better there. Dividend growth, that is a nice number at 13 points. Love a double-digit dividend growth company. So that means if they were paying $1, now they're paying $1.13. That doesn't mean it went up. It's now they're not paying 13%. They're paying 0.5%. That is all that dividend is, but it did go up substantially versus where it was. They are at a premium. So again, not really something I'm looking to, buy into right now based on valuation. Where the other two are, I still think that Costco will be able to weather the storm. I think they're going to be able to buy the product that they need, or they're going to get a different product mix into their stores, right? So I think they're going to be able to navigate it pretty well. I still think that Walmart, Costco have that buying power to go to Taiwan or go to Vietnam or wherever they need to buy product from in order to get it in the stores, and they're going to do that as best as anyone else is going to be able to manage these tariff headwinds. So forward PEG ratio is a 5, so that is pricey. Their price to sales is cheap compared to the S&P, but more expensive than where they historically trade, more expensive on forward, more expensive on trailing. So these are not numbers that I am really itching to see. Why are these numbers so high? I think a lot of people are leaning into this one for a little bit of stability during some rocky times, right? So a lot of people roll back into Costco for all the things that Costco does really, really well. And a lot of people are piling into the trade, it appears. So not something I'm itching to ride that wave with. I'll let you guys pick this one up at, pushing $1,000, which I'm not so concerned about the pushing $1,000, right? I'm more concerned about these actual numbers. The $1,000 just represents what one share is, but it doesn't give you the whole story as to what these numbers actually represent. You're paying too much for the growth that Costco is currently returning, right? So I would look other ways to go ahead and invest right now. So that is what I got on those fronts. We talked all these things. Walgreens, we talked United Health, we talked Apple, NVIDIA, AMD, Eli Lilly. We talked all those. So we got a lot of different earnings coming up this week. Is there anything else that I got on here that we need to go over real quick? Any news on E-Trade? I think that was about all that was like really, right in front of me that I really wanted to talk about, guys. So again, I really want to point out the fact that yes, we're in a lot of turmoil. Yes, there's a lot of problems between US and China. There is a way to play it. I think that some of the NASDAQ names that have gotten beat down, I think some of them start to make sense. I think others are making less sense with tariffs and just where they are. I saw a couple of people looking at CrowdStrike recently. They were talking about this one. Still a little bit rich based on, I know where this thing was trading. And we got, coming back down from 455, but I know this was a rocky, couple trading months here for CrowdStrike. So we had, started the year 350, call it. We got up to 455. We went down to 308. And we're back up a bit, but I'm not seeing too many reasons to buy this thing right now. I'd really have to take a look here. Rise is 3.7%. We got some price targets coming in that were higher. I'd have to take a deeper dive here as to why CrowdStrike is getting a bump up on their price targets. Still probably one of the best to breed. I'm still looking at all the other names that we have been looking at. When it comes to the investing challenge, if you're new here, I am taking $200 of my own money, putting it into an investing challenge portfolio over there on Webull, where if you want to start up an account as well, you put in $500, you should get 20 free fractional shares of randomly selected companies. So that's pretty awesome. Next era, we were looking at that one. Going to report some earnings this week. I still like utilities. I think they are a much safer play than a lot right now, domestic in nature, in a lot of the main areas that I think around the country that are really focusing on some growth. But for this week, guys, man, I've gotta give the nod to Amazon. That's going to be the one for this week for me. So, quick recap: we had for the year we were looking at these 12 names, which is actually 13 with adding in Bitcoin, NVIDIA, Tesla, Meta, Amazon, Eli Lilly, NextEra, CrowdStrike, Costco, Bank of America, and AMD. AMD's probably got so much upside from here at 87. Oh my gosh. I told you guys I'd be buying it down here. It's not that I'm not buying it down here, but I want to see some certainty as to what's going on. But then again, if I wait for the certainty, is it too late? Is this going to be bottom of the barrel pricing for AMD? And do we have, even on this low end, do we still have 25% of upside if all things go wrong? I mean, that's kind of what you think this low end would be, right? All things go wrong, they're going to be at 110. I mean, is everything going to go that poorly for them? Do they land somewhere in the middle? I should probably buy some AMD. Now that I'm going to talk myself into it. I want some more certainty, but if we get some certainty, do we shoot up 15, 20%? And we certainly could, right? We saw that with Eli Lilly this week. We've seen it with UNH go the other way that, we're going to trade down. For me, it's going to be an AMZN type week. I don't want to buy Tesla into earnings tomorrow. Let's take a, oh no, that was Wednesday. Was it? Yeah, it was the 20. No, it's Tuesday. Sorry. On the 22nd. So we're watching that high price to earnings multiple. That's normal for Tesla, but going to be volatile after earnings. 23% of upside there. We've got LLY. What was the upside? And remind you, these are just kind of analyst numbers. 21. Amazon was pushing 45, 46%, 47%. Meta, we looked at that briefly. I think that was much lower. Not much lower, 43%. NVIDIA, old NVIDIA. I still love NVIDIA, but it's a tough time to buy it, right? So 67% of upside on NVIDIA. But I still think that Amazon's going to get the nod. That's just where my heart tells me I've got to look this week. I think it's not as much in the crosshairs as what NVIDIA, AMD are. NextEra, I like it, but I feel like I've got a lot more clarity as to where Amazon's going to go. And I think more people are coming to the table. So I got to give the nod over there. They've got the web services. We've got a lot of growth. I think they can navigate through a lot of the tariff talk. They've got the buying power. They've got the relationships. They've got all things growing for Prime, for video. I just don't think that powerhouse can be stopped with tariff talks. I think they're going to navigate around it. So that one is still strong. That is still going to be my top pick right now. IBIT. I was buying some Bitcoin this past week. Let's take a look. We're at 48.26. I need a spot price on Bitcoin. Let me go to my crypto.com app. We were at like 85. I'll pull this up and then I got to get out of here, guys. But Bitcoin, 85,751 last check, or currently when I'm checking it. Ethereum still at, not great numbers, 1,600. But Bitcoin, man, I still think that Bitcoin rolling up through the end of April should remain strong. A lot of people pulling out of their own currency and, rolling into Bitcoin for all things money related, uncertainty that's out there, and currency pricing and just where everything's all over the market. I think that Bitcoin could get some more buyers from that. Plus a lot of people just trying to buy this dip on BTC. So that is what I got for you guys. Thank you very much for stopping by. Please make sure you like, subscribe, and share. Definitely helps the page, helps the podcast grow. And I'm happy to be here talking some stocks with you guys. So that's all the time that I got. But let's get out there. Let's buy up some of these dips. I think it might be time, and at least on a couple of these names. So that's what I'm going to do. And I will talk to you guys next time. Take care.